All right, so we've been getting a ton of questions from you all about, what President-elect Trump's proposed tariffs could mean for gold and currency trading.
Yeah, it's definitely top of mind for a lot of people.
That's been making some waves.
Yeah, this article is, I think what's interesting here is it really highlights how volatile things could get,
Yeah.
especially in places like China and the Eurozone.
Yeah, and for traders, volatility can be a good or a bad thing.
Right, exactly. It cuts both ways.
Yeah, for sure. So let's just get right into it. I mean, some of these tariffs that are being tossed around, I mean, these aren't small numbers.
Right.
We're talking like a 10% tariff on global imports, up to 60% on Chinese goods.
Wow.
And then a 25% surcharge on things coming from Canada and Mexico. I mean, if these actually happen, it's hard to imagine it not making some pretty big waves.
Yeah, I mean, it's not just ripples. It could be a tidal wave. You know what I mean? I mean, think about it for a second. Those tariffs could totally disrupt how goods move around the world.
Right.
And then other countries might retaliate with their own tariffs.
Yeah.
And then you've got supply chains getting messed up and prices going up globally. I mean, for somebody trading gold or currencies, that kind of uncertainty, that's a big deal.
Yeah, that makes sense. So for someone who's holding gold, though, wouldn't this uncertainty actually be a good thing? I mean, could we see gold prices go up because people see it as a safe haven in all this turmoil?
Yeah, absolutely. Gold tends to rally when things are shaky, when there's economic or political instability.
Right.
And then on the Forex side, all these potential shifts could really make currencies go haywire.
Interesting. So it's all about understanding how these events could impact, whatever you're trading.
Right.
Gotcha. Okay. So we've got this global uncertainty potential for prices going up. And it seems like the article's really focused on China being in the crosshairs of these potential trade wars.
Mm-hmm. Yeah, and we're already seeing some reactions, their stock exchanges are a little jumpy, and the Yuan, their currency is looking a bit weak.
Right, yeah, it's like the whole world's just waiting to see what happens next. And speaking of the Yuan, there's this prediction from Barclays. They're saying it could weaken to 7.5 per dollar by the end of the year. But get this, they're saying if the U.S. goes all in with that 60% tariff on Chinese goods, it could go even lower, like to 8.4.
Yeah, those are some big numbers. And I mean, if a yuan gets that weak, it could make Chinese exports cheaper, which might seem like a good thing on the surface, but it also comes with risks. We could see investors pulling their money out of China, leading to even more instability. And it could push Chinese investors towards gold to protect themselves, as a hedge against the falling yuan.
So a lot for traders to watch there.
Yeah, absolutely.
The article calls the combination of tariffs on China and the EU a toxic mix for the euro.
Oh.
Sounds pretty ominous.
Well, it might sound a bit dramatic, but I think it captures the potential danger here, for the euro, because think about it. If China's economy weakens because of these tariffs, it spills over to Europe.
Right.
Because they're big trading partners, right?
Yeah.
And then if you slap tariffs on European goods too, you're just adding fuel to the fire.
Right.
And then on top of all that, you've got the European Central Bank maybe cutting interest rates to try to stimulate their economy, while the U.S. Federal Reserve might be raising rates because of inflation, caused by the tariffs. All of that puts downward pressure on the euro.
So basically, for someone watching the euro, things could get really interesting.
Interesting is one way to throw it. Yeah, you could see a big drop in the euro's value, which might be good for some types of Forex trades.
Okay.
And on the flip side, gold being priced in U.S. dollars might start looking even better to European investors as their currency weakens.
Right.
So it really highlights how all these global events can create opportunities, but also risks, for traders.
It's a complex web for sure. And it's not just China and Europe that are in the spotlight here. The article also mentions Canada and Mexico as being vulnerable, particularly their currencies. The Canadian dollar, or loonie as they call it, and the Mexican peso.
Right. And these currencies are really sensitive to U.S. trade policy.
Yeah.
The loonie's already at a 4-year low.
Wow.
And a full-blown trade war could send it even lower, and the peso's taken a beating too. It dropped 18.6% just last year in 2024.
So for Forex traders, those are the ones to watch. I guess, especially in relation to the U.S. dollar and gold, might become even more attractive as a safe haven if Canada and Mexico start having problems.
Exactly. It's all connected. And what happens in one part of the world impacts markets everywhere. And that's what makes it so important for traders to stay informed and be ready to adapt,
Be able to shift on a dime.
Exactly. And it's not just reacting, to what's happening today. It's thinking a few steps ahead.
Right.
Like, how will all this impact things down the road?
Yeah.
Savvy traders need to be thinking about that, anticipating those knock-on effects. Yeah, like for example, if these tariffs actually cause prices to go up in the US, how's the Federal Reserve going to react?
Right.
Will they hike up interest rates even faster to try and control inflation? And how will that affect the dollar, and other currencies?
By a chain reaction.
Exactly. One thing leads to another, and it's easy to get caught up in the headlines without seeing the bigger picture.
Yeah, for sure. So for our listeners who are maybe newer to trading gold or currencies, what are some key things they should be focusing on to kind of navigate this whole potential tariff storm?
Well, for gold, it's crucial to really understand how it works as a safe haven asset.
Okay.
When the markets get all jittery, investors tend to flock to gold, as a store of value,
Right.
and that can push the price up. So keeping a close eye on what's happening geopolitically
Yeah.
and how investors are reacting to risk that's essential for gold traders.
So it's not just about the tariffs themselves. It's more about like how people feel about them, how risky they think the whole situation is.
Exactly. Investor sentiment plays a huge role.
Okay.
Fear and uncertainty, they can really drive gold prices.
Gotcha. So if I'm a gold trader, I should be looking for any signs that people are starting to get nervous about the economy.
That's a good takeaway.
Okay, good.
Now, for those trading currencies, the key thing is understanding how interest rates and economic growth can impact exchange rates.
Okay.
For example, if the U.S. goes ahead with these tariffs and inflation starts to rise, the Fed might have to raise interest rates faster than central banks in other countries.
Okay.
And that could make the U.S. dollar more attractive to foreign investors, potentially pushing its value up compared to other currencies.
So a stronger dollar in that scenario, what would that mean for people trading Forex?
Well, remember, with Forex, it's all about relative value.
Yep.
You're not just looking at one currency by itself,
Right.
but how it's performing against others.
Yeah.
So you've got to consider what's going on in those other economies and how their central banks might react to these global shifts.
So there's a lot to keep track of. Any advice on how Forex traders can kind of stay on top of everything?
Staying informed is key. Follow the economic news closely, pay attention to what central banks are saying, and keep an eye on important economic indicators, like inflation and GDP growth.
Right.
And don't underestimate the power of technical analysis. Charts and patterns can give you valuable insights into currency trends and potential trading opportunities.
You've given us a lot to think about. It seems like the potential impact of these tariffs on gold and Forex is pretty complex.
Yeah, it is. The global economy is incredibly interconnected. What happens in one place can have ripple effects throughout the whole system. And for traders, that means really understanding those connections and being able to anticipate the potential consequences.
Right. Okay. So to recap, we've explored how the proposed tariffs could impact both gold and Forex markets. We've talked about the potential for more volatility, currency fluctuations, and shifts in investor sentiment. And we've also emphasized how important it is to stay informed, understand key economic concepts, and be ready to adapt trading strategies as the situation changes.
Exactly. And I want to emphasize that this is just the start of the conversation as these trade policies take shape. It's crucial to stay alert and keep monitoring the situation. And global markets are constantly reacting to new information. And being flexible is key to navigating these turbulent times.
That's a great point. Now, before we wrap up, I want to shift gears a bit and talk about some specific trading strategies that might be relevant in this environment. Like, what can traders actually do to position themselves given all this uncertainty?
That's a perfect segue. Let me dive into some specific tactical approaches for both gold and Forex traders in light of these potential tariff wars.
So let's get specific. If I'm a gold trader, what are some strategies I might consider with these tariffs, potentially happening?
Well, one classic move when things are uncertain is to just increase your gold holdings. Like we've been talking about, gold is often a safe haven, and its price tends to go up when investors are looking for stability.
Okay.
You could buy physical gold ETFs, or even consider mining stocks.
So basically like a buy and hold strategy, betting that gold will go up in value over time.
Exactly. But, there are no guarantees in the market.
Right, of course.
Gold prices can be volatile, and there's always a chance of losing money. It's important to understand your own risk tolerance, and how long you plan to invest before you make any moves.
For sure. That's a really important point.
Yeah.
Okay, let's talk Forex. What are some things Forex traders might do in this environment?
Well, one approach could be to look for opportunities to short currencies that are expected to weaken against the U.S. dollar.
Okay.
For example, if we see the euro continue to drop because of everything we talked about earlier, a Forex trader might short the Euro-USD pair, meaning they'd profit if the euro keeps falling against the dollar.
Okay, so for those of us who maybe aren't as familiar with Forex, could you break down what shorting a currency actually means?
Sure, shorting a currency is basically betting that it's going to lose value. You're borrowing that currency, selling it at the current price, and then hoping to buy it back later at a lower price to repay the loan. And the difference between what you sold it for and what you bought it back for, minus any borrowing costs, that's your profit.
So it's a way to potentially make money when a currency goes down, but it comes with its own risks.
Absolutely. Forex trading is leveraged, which means you can control a big position with a relatively small amount of capital.
Okay.
And that leverage can really magnify both profits and losses. So managing risk is super important.
It sounds like you really got to know what you're doing. Are there any other strategies Forex traders might want to look into?
Another thing to consider is carry trades.
Okay.
This is where you borrow in a low interest rate currency and invest in a higher yielding one.
Okay.
For example, if the US dollar strengthens and interest rates go up, a trader might borrow in Japanese yen, which typically has very low interest rates, and then invest that borrowed money in US dollar assets. The difference in interest rates can generate a profit, but you have to be careful about exchange rate risks.
Could you give us like a real world example of how that might actually play out?
Sure, imagine you borrow like 10,000 Japanese yen at a 1% interest rate, and you convert that into US dollars. Then you invest those dollars in a US bond yielding, say, 4%. You're basically making money off the 3% difference in interest rates. But if the yen suddenly strengthens against the dollar while you're in that trade, it could eat into your profits or even cause a loss.
So with carry trades, you're trying to take advantage of that difference in interest rates, but you also have to be really aware of how currencies are moving in relation to each other.
Exactly. Forex trading is about finding those little edges and being really smart about managing your risk.
It definitely seems like a challenging market to navigate.
Oh.
Well, I think we've given our listeners a lot to think about today. We've explored how these proposed tariffs could shake things up in both gold and Forex markets. I've talked about some key trading strategies and really emphasized the importance of staying informed and managing risk.
Yeah, I hope this deep dive has been helpful and given everyone some food for thought, as they think about the markets.
Absolutely. And remember, knowledge is power, especially when it comes to trading. Keep learning, stay curious, and don't be afraid to ask questions.
Well said, and until next time, happy trading, everyone.